everyone from around the world. Thank you for being here. I just want to again make sure that everybody can see my screen and hear my voice. Yes and yes, beautiful, wonderful. Okay, I'm going to step aside for a moment and let Jan Arps, who you all know, and give you a little introduction, and once he does, I'll be off with it.
Okay, thank you very much, Joel. As he said, I'm Jan Arps. I'm founder of Jan Arps Trader's Toolbox. I want to welcome you all to this very eye-opening webinar on price and volume, the only true leading indicators. Let me tell you a little bit about myself, and then I will tell you also, of course, about people. I started my technical analysis career back in the 1950s when I was in high school. My dad, who was a petroleum engineer, dabbled in the stock market on the side, and I helped him out on weekends to maintain his stock charts. Every Saturday morning, my job was to go to the newsstand and pick up a copy of the Barron's newspaper. And I'd go through the stock tables and plot the latest prices of all the stocks that we were interested in on big sheets of graph paper. Then, with an adding machine and a slide rule, do any of you remember that? We didn't have Apples or IBMs in this day. But anyway, I would calculate moving averages for each symbol and plot them on the price graph by hand and people. Ever since, I've been involved in the markets, first as a trader, then as a broker, and subsequently as a developer of unique technical analysis tools. Early on, I realized that the relationship between volume and price were the most valuable parameters in predicting which way prices were going to move. And this led to my development 25 years ago of an early tool that I called the Arps Radar 1 Clear Greed Index, which has subsequently been one of my most valuable trading tools. And basically, it was looking for the relationship between price and volume. Since then, other traders have built on the importance of the relationship between price and volume. And in the past year, I've become acquainted with Joel Posey, whose extensive experience with price and volume studies has increased my depth of understanding of this powerful relationship in projecting price movement. Joel really gets it. And I was very pleased to build an affiliation with Joel. I've learned a lot from him about price and volume, and this time right now I'm going to give you the opportunity to learn a lot about price and volume. So I'd like to turn this presentation over to my friend Joel Posey on the subject of price and volume, the only true leading indicators.
Thank you, Jan. A little government business before we get started. You're all familiar with disclaimers. Past performance is no indicative of future results. More importantly, think carefully whether trading is appropriate for you in light of your experience, your objectives, your resources, and other relevant circumstances. Never ever trade with money you cannot afford to lose. You're focusing on loss. We'll get into mind and emotional set momentarily, but where's the first thing for you to take away? What are you concentrating on? If you can't afford to lose money, that's exactly what you're going to do, because that's what your energy is all about. Another important point is know your risk before you enter a trade and put your stop losses on the floor. Are you struggling to provide for the needs of you and your family? And probably so. Will you be able to maintain your lifestyle in retirement? Probably not. You're here because you want to create income. Because I know how they can improve every aspect of your life, sharing these ideas with you excites me. One of the principal reasons for wanting the amount of money you desire is to provide for your family, and not just in an adequate manner, You want them to live a life that's full, giving them choices. So realize that as long as you live and are able to manage money, you will be able to do as you want with respect to your family, to others, and to yourself. The New York Times reports the odds are you will run out of money in retirement. This is the #1 fear of Americans. It's not dying young or getting audited by the IRS or even being attacked by terrorists. People are afraid they're going to outlive their money, and justifiably so. According to the Times, over half of those entering retirement age will ultimately run short of cash. If you've ever felt as though your whole system was rigged against you, guess what? You're right. Tony Robbins, who I'm sure you all know about, he agrees. He said, the fix has been in for years, and it hasn't gotten a whole lot better with all those so-called reforms on Capitol Hill. In some areas, it's gotten worse. That was the intention. That's how the game was set up. Here's some facts that matter, as opposed to matter of fact. There's a lot of matters of fact, but they don't always matter. 45% of all Americans have less than $500 in savings. 77% of all Americans are living from paycheck to paycheck at least some of the time. 1 out of every 4 workers in America brings home wages that are at or below federal poverty level. More than 100 million Americans are enrolled in at least one welfare program run by the federal government, and that does not even count Social Security or Medicare. And 49% of all Americans live in a home where at least one person receives financial assistance from the federal government. Back in 1983, the number was less than 30%. Things are not getting better, folks. Things are getting worse. The average real salary today, adjusted for inflation, is almost 10% lower than it was in 2007. It's lower than it was in the year 2000. And the average hourly wages are lower than they were 40 years ago. A salary will not keep your family afloat anymore. Even 2 salaries won't keep most families afloat. The idea of retirement for tens of millions of Americans doesn't even exist anymore. Mark Zuckerman, the publisher of the New York Daily News, recently wrote, declining wages are killing the American dream. And back to a point we made earlier. Life's biggest danger isn't dying, it's living. Outliving your money. So you must take control of your financial future. A third of the middle class don't expect to be able to retire before age 80. And a quarter of the middle class are tapping into their retirement accounts to pay bills. And 66% of American ages 45 to 60 plan to delay retirement. This is what it's all about, folks. Here's the vast majority of people called the middle class. And the middle class has money because they earned it. On the right, we have Fraud Street, a financial network. Financial network is destroying the middle class. What it has done is it's taking money from earners and moving it over to those people who manage money. So you have high fees for poor performance, and it's hurting middle class people, and we're going to get into fees in a moment here. I'm making a case here. I'm building up a foundation. You can understand where I'm coming from. You're living this. On the left, you have Clown Street. Ineptness, taxes, wasteful spending, all built on the backs of you, me, the vast majority of people. It's the way the game was set up. Lucky Luciano, who was the father of organized crime in America, in case you don't know who he was, After a visit to the floor of the New York Stock Exchange, he said, "A terrible thing happened. I realized I had joined the wrong mob." Gambling casinos, even the government. The bottom line is, the biggest fleecer in America is the financial industry. You're going to find out momentarily what that means. It means a lot. So, what's the cost of not solving this problem? Your quality of life on all levels will suffer. That includes the home you live in, the home you can choose to live in, whether you say yes or no to your child. And that equates to, for those that lack, there's choice, either or. For those with money, it's a different choice. The choice is both, either or both. Depends where you're coming from. So not solving this problem, being able to create current income in substantial amounts, being able to put money away for the retirement age, all this affects the places you can go, the people you can help, the people you attract, your health, your happiness, your retirement, and on it goes. So if you do not solve this issue, you know things are only going to get worse. You know, we saw what happened to the average wage, and we saw what's happening to salaries. But if you do solve this issue, imagine how the joy, the freedom, the power you have never experienced before feels. What would that transformation be worth to you? Tony Robbins asked in the book Money, Master the Game, just came out. It's a fabulous book. Everybody should read it. It should be in every course on economics. What your life be like if money didn't matter. So here's a quote. He said, "Imagine never having to go to an office every morning, never having to pay bills, living life on your own terms. If you had enough money coming in to not only cover your basic needs, but also your goals and dreams, how would that change the quality of your life?" And he walks you through several simple steps to becoming financially free. Man did his research. He knows what he's talking about. As you're going to find out, I have the credentials to evaluate. I'm qualified uniquely. Shortly after passing the bar exam in 1976, I found out about the 1974 Employee Retirement Income Security Act, known as ERISA. This was the start of the retirement planning industry. I was right there when it was founded. I quickly became a defined benefit pension plan expert. They're known as greed plans. They're able to put away the most amount of money in the shortest period of time, and the plans were all leaning heavily and balanced towards the top people, the vice presidents, the presidents, the owners, as opposed to the workers. So I became this defined benefit pension expert, and I catered to the retirement business and estate needs of high net worth individuals in West Los Angeles. I tell you this to let you know, I understand what it is to plan. I understand what it is when the plans don't go right, when things have to be changed. I've been through it with hundreds of clients. It's a process. 26 years ago, on the other side of the equation, going from the legal background to the trading world, 26 years ago, Richard Ney taught me that markets are nothing more than merchandising mechanisms run by thieves who do their absolute best to separate as much money from as many people as possible in the least amount of time. The markets were set up to transfer money from the many to the few, from amateurs to professionals. Now this goes back to Tony Robbins. As I say, the man speaks the truth. because of what I read in this book I put on the home page, a fact that could be worth millions. And this is no secret to people in the industry. It is to those outside the industry. And these are no BS fee checkers. And the difference between 1% fees, be it your mutual funds, which you shouldn't be in at all to begin with, that's another story. Your retirement accounts, fees can range between 1 and 3%. Some a little less, some a little more, but that's an average. It can make a difference of as much as 70% in the final value of your account for retirement. And that, again, is no BS. You see how money grows, and if it's not being used and it's being taken by people in the financial industry and people in the government industry, then the example is, instead of having $1 million for retirement, you could end up only having $300,000 here. So I invite you to go to the website and click on check my fees, and that in itself make being here well worth its while here, depending upon the size of your account. Could mean tens of thousands of dollars, hundreds of thousands of dollars. I'm sure there's people in here that are being overcharged that over the next 20 to 25 years, this is going to be worth $1 million. Just one fact alone. This is just part of the equation. But this is what people that do financial planning understand and know. This presentation is for you if you are tired of being a victim of what you don't know, you are a person who wants to take control of your financial future, you're a person who takes direction, you're goal-orientated and action taker, you're a person who does not make excuses. Jan and I are not for everybody. Does this sound like you? You're tired of missing profitable price movement? You're fed up risking too much and being rewarded too little? You're worried about not being able to retire on time and on budget? You're staying awake, unable to support yourself and your family in the manner you imagine? Then I got great news for you. There's a solution. The How to Create Income solution, where you can trade any market using the secrets of price and volume. A pause for me to have a drink of water. Thank you. Okay. This is powerful information that you can immediately start applying. Why? Because this is how those who take the most out of the market position themselves. Why? Because this is how those with the most manage their assets to create capital, to protect capital, to grow that capital. Price and volume works in any market in any time frame. Okay, you can write this down. Another takeaway that would be worth a lot of money to you, depending on your skill level and your application of the principles. But there are 4 steps to independence: financial independence, money independence. And I got my lawyer hat on now. And the first thing is, you got to create money, whether it's doing the things that Tony says to do, and some of the things he says to do are right for some people, and some of them aren't right for some people. And that's for everybody to decide on their own. You're custom. Everything is customized to doing planning. There's not one size fits all. So if you need to create money, and in this case, you develop trading skills to the point where they justify forming a corporate entity. So that's the first thing we talk about. And that's another thing that most people aren't aware of or never think they could do. But a corporation is one of the greatest ways to save money. The government encourages incorporation, and they give you all kinds of tax incentives to do so. But it has to be financially feasible, and that's one of the bad things inside the financial industry. If your business, whatever it is, trading, doctoring, lawyering, accounting, painting, acting, doesn't make a difference. Before you start taking on the cost of entities and the like, You have to be financially feasible. A lot of people in the financial industry are forming corporations for people long before it pays for them to do so. But when you do so justifiably, it will increase your cash flow tremendously. A lot of reimbursement, a lot of tax deductions. So that enables you to establish a defined benefit pension plan where your dollars are tax deductible and tax sheltered. So dig this. Back to when I was talking about being uniquely qualified. We want to make money efficient. And the more of it that we hold on to and we can use, the better. And that is done in two ways. One is by deducting it and not having to pay income tax on it, by putting it into a plan. And don't worry if you're 55 years or older and you haven't put enough away, they let you really jack it up to catch up. It's a fabulous opportunity you can take advantage of. So, not only is it tax deductible, but it's tax shelter, which means that while it's in the plan, it isn't going to be taxed. That's going to skyrocket all those beyond 1% fees that would have been taken out, but you've switched to someone that charges a fair rate, 1% or less. That's where we're talking about all that money adding up. The next thing is asset protection. And Jan and I are going to make a no-cost offer to you later on today. And for those of you who take advantage of it, one of the things we'll make available to you is an asset protection guide. It's just been revised for 2015. It's from an attorney I've been aware of for well over a decade. He's been in the asset protection and tax shelter business for 30 years, has an LLB in taxation. So at the end, going to make an offer, and those that take us up on the offer, we'll make that available. And there's another gift we have in mind I'll get to in a moment. So that's asset protection, making sure that your money is not attackable by lawsuits. And here's another secret of the rich and famous: compounding money. So retire and live the life you love by following these 4 steps to financial independence. And anybody tells you it's more difficult than this, they're lying to you. They don't know what they're talking about. Make your money tax free. Make your money work for you as long as possible. Make your money tax efficient. Protect it, and then grow it. If you understand money, you earn compound interest. If you don't understand money, you pay compound interest. You want to be the stuckor, not the stucky. And that's the way it is, folks. If you don't understand money, you end up squandering it and paying a lot of money for things that you didn't have to pay for. But if you understand it, then you earn compound interest. And it's one of the miracles. Einstein called it the greatest power created by man. And let me show you how powerful it is. This is the growing power of money. Starting with $10,000 compounded at 50% a month, and we're going to get into a formula that's going to show you exactly how in any market, in any futures market I should say, any futures market of your choice, that is, you can shoot for 50% a month. If you did so, this is how money grows exponentially, it's called. First month you make 50% of 10,000 and it's 15,000, and every month you keep throwing it in there, no taxes. In 1 year, 10,000 grew to 1,297,620. Well, now the fun begins, kids, because what happens in the 13th month when you make 50% on that money? And what happens in the 14th and the 15th month? You can see. You get started and you keep moving and things just start growing in leaps and bounds. Results. The rewards of freedom are phenomenal. They are rewards that only a very small select group of people ever collect. Here's one of those select individuals. And we can read here his story. It was an email I got on Friday the 21st. He started the course on the 14th, started working with me. All he had to say was, wow, this is amazing. For years he struggled to pull a meager 50 pips out of the market in a single month. In the last 3 days, he's made 413 pips of profit just following the directions. Here are his trades broken down. For those of you not familiar with Forex, a pip is worth $10. That's $4,130 of profit in 3 days, 3 days trading. Is this typical of people who work with me and John? No. Can it be done? Yes, it has been done by Mark and by others. And can you do it consistently? Here is about 7 months later. Here is his Phil. End of January 2014. Trading Forex again. He's trading some size. $6,720 in profit. 2 trades. He's going to pay his moving expenses. He's moving back home to be with his parents who were in retirement and not so healthy. Question: are you willing to do something different to have something different? Price and volume are the only true leading indicators. Do you want to trade with foresight rather than hindsight? And that's the beauty of price and volume, is anticipation. You know what price has to do based upon the inventory needs of insiders. Everybody's looking for the Holy Grail. Nobody tells you where the Holy Grail is. Except for people like Jan, Joel, and Randy. Your successful trading requires the right mindset, and it should also say emotional set. And emotions, you write this down. This is well worth the price of admission. This affects you in every aspect of your life. Emotions always trump willpower. Your thoughts, your feelings will always ultimately determine the result. So you need to have appropriate thoughts and you need to have appropriate feelings, or else you don't get an appropriate result. The difference between you and a professional trader is, yes, partly knowledge and partly skill, but mostly it's inside, and that's where the Holy Grail is. The Holy Grail is right where you are right now. What you're looking at is right where you are right now. The mechanical aspect of trading, it's a given. The only variable is the trader. You can give the worst system to the best trader, they make money. You can give the best system to the worst trader, they lose money. The key, only hold in mind what you want, and that is all you will ever get. Again, worth the price of admission in your life in every aspect here. Thoughts and emotions are energy. Like energy attracts like energy. So if you don't like what you see outside yourself, then you gotta go inside yourself and change. Because that's what's causing what's happening on the outside. In truth, the only competition you will ever have is your own ignorance. You must begin to understand that the present state of your bank account, your sales, your health, your social life, your position at work, etc. is nothing more than the physical manifestation of your previous thinking. If you sincerely wish to change or improve your results in your physical world, you must change your thoughts, and you must change them immediately. And you must change your emotions. As Randy has told you. Randy's an expert at this. Jan and I have been exposed to Randy's thoughts and feelings, and we're 100% behind him. He's got you covered from that standpoint. We just encourage it. No conflict between us whatsoever. It's because it's the truth. So what you're about to discover is a simple, proven method to make trading profitable and low risk. That's practical, it's easy to understand system with amazing wealth building opportunities. And that is not an exaggeration. The markets, the financial world is where people get paid the most. This guy's making $1 billion a year in the financial industry. It truly is amazing, and you're not limited by a salary, you're not limited by a state of the economy, you're only limited by the quality of your skill set that you develop. How cool is that? It's as cool as it gets. That's independence. You'll be able to spot insiders' actions and duplicate them, and you're finding out exactly how the market works and why it's set up this way, and you're finding out how to take control of your financial future. So some of this we've touched on, and we'll move into some of it in a little more detail as we go along. Notice the license plate on Richard Ney's car. I would like to think that you've been woken up by what you've heard so far. People need to be woken up. The system is set up against them. If they don't know how to work the system works them. They become the stuckee. You want to be a stuckoer. So, markets don't move, they are moved. And there's a picture of Mr. Ney. He was an actor in Mr. and Mrs. Miniver. He married Greer Garson for a number of years. Here are two of his Wall Street bestsellers. New York Times bestsellers, that is. The Wall Street Gang and The Wall Street Jungle. And the third one was Making It in the Market. And to quote him, in which it's shown that if you scrap, and I love this quote, that's why I'm showing it to you, if you scrap traditional approaches to the market and attack the financial conspiracy with its own weapons, you can beat the stock exchange insiders at their own game. You can be a winner in the money game, as Tony Robbins is talking about. You just need to be educated. Once your ignorance costs people, it's cost them a fortune, it's cost them trillions of dollars and the quality of life. So, who was Richard Ney? Richard Ney was the foremost expert on market manipulation prior to his death in 2004. He was on the cover of Time magazine in 1962 for publicly calling the crash. And he called every subsequent crash thereafter. And he was so well respected, the richest man in the world, J. Paul Getty, gave Ney control over money to trade for him. Now we want to look at the trend here. Market manipulation is not new. It's been going on for 150 years plus since they started the game, and it's going to go on as long as the game goes on. And we take you back to the days of the robber barons, the Gilded Age. And old Daniel Drew, he said this in his memoir. He and some of the other barons did a run on the greenback, which was $1. And he said, anyone who plays the stock market not as an insider is like a man buying cows in the moonlight. Conversely, Richard Wyckoff wrote extensively about the market, including a newsletter and books, till his death in 1934. You got to read between the lines what he says here. But it's beautiful. Listen to what the market is saying about others, not what others are saying about the market. And the market are the professionals. So what are professionals saying about amateurs? Not what amateurs are saying about professionals. Nice distinction. And then we get to Richard Ney, who said, like exchange insiders, you must only buy on declining prices. That's how you buy wholesale, as opposed to sell retail. And I promised you we'd get into that. And we're on our way. Okay, trading is simple. People make it complex. And price and volume more than gives you a fair advantage. And there's people in the money game and they want to get unfair advantage. They don't want to play the game clean. Price and volume allows you to play the game clean. Is trading really that difficult? Well, it sure is if you're an amateur here on Payne Island. But you get over here and you get transformed in ecstasy as a professional on Pleasure Island. The difference is what professionals know. And back to that emotional mindset slide. It's also what's inside of them, what they know about their subconscious, what they know about what they put into their mind, what they put into their heart, the energy they're creating. So the secret is to want what the market wants. Absolutely, the market will unfold and make the decisions for you. So you can write this one down too. You want what the market wants. What better way to trade? The professionals leave their footprint. So, you learn to read a chart like a professional. Price and volume being the only true leading indicators. Then you're going to trade with foresight, not hindsight. That anticipation we spoke about earlier. Back to why would you want to trade any other way when this is how it was designed to work? So, you have a choice. You can stay over here on Payne Island financially, or you can move over here to Pleasure Island. And that's not just in trading. You know, these ideas are universal. They cross into money making no matter what. The merchandising process, as I said, Mr. Ney taught me that it was nothing more than anybody tells you the trade's more difficult than this doesn't know what they're talking about, and you run away from them right away. You don't want to poison yourself. Back to mind emotional set. Don't even put the seed in. Just get away. All right, so professionals are buying down here when prices are low, buying on down bars, buying at wholesale. So while that they've accumulated inventory, they have an incentive to raise prices. So they do. Price goes up. And price then attracts amateurs. So contrary to popular misconception, gotta let you know. You can write this down. It is not buying by amateurs that cause prices to rise. It's raising prices by professionals that cause amateurs to buy. And the opposite side of the equation over here on the right, in selling, it's not selling by amateurs that cause price to fall. It's falling prices that causes amateurs to sell. So who's leading the pack? That you need to know. So now we've accumulated, we've created demand. They distribute their inventory at a profit. They bought wholesale, they're now distributing at retail. And when they have distributed all their inventory, they can only meet the demand one way. They have to short sell. And that's why prices go sideways at tops. It's also why they go sideways at bottom, only it's the reverse. It's the accumulation process, which I have a slide for you momentarily. So now it's the reverse. The inventory needs is to sell, so they're selling price falls, they cover their shorts, and the whole process starts again. Anybody tells you, it's like a public service announcement. Anybody tells you trading is any more difficult, complex than this, run right away. They don't know what they're talking about. All right, so this is shocking, but it's true. Now, all those years I worked with high net worth individual here, but first you got to create it. And that can be in trading, it can be in any other way. And as Tony says, and as wealthy people know, the more sources of income you have, the better. That way, if something isn't doing well, other things are covering it, etc. So people with money, those who think both as opposed to either or, they first think about protecting their capital and their profits second. You got to stay in the game. If you lose 50% of your capital, you need to make 100% back to break even. Never risk more than 2% of your trading account in any trade, and normally I would tell you never risk more than 1%. But because price and volume being a leading indicator, and the fact that you trade with the tightest stops, the greatest reward risk ratio in trading, you can risk a little more because you're making a hell of a lot more, as you're going to find out. So it's all about pattern recognition. And that was the second thing they taught me after markets are manipulation. So when elephants walk across your front lawn, they leave their footprints. And the elephants are the insiders, the pros. Your front lawn happens to be a price and volume chart where they can't hide it. It's impossible. It has to be there for anybody who can read the footprints. So the rules of engagement, you can write this down as well here. And this is the simplicity of trading. Here, for those of you that can't figure out how to enter trades, well, first of all, you got to be able to determine the trend. And that's why most people fail, is they either can't determine the trend or they instead are trading against it. So they want to get one of those unfair advantages I was talking about earlier. So, once you determine the trend, an uptrend, you buy an oversold strong down bar at logical support. So that's uptrend 1, 2, 3, 4, 5, your checklist. And then a downtrend, it's reverse. You sell on a overbought weak bar at logical resistance. This is how pros are buying at wholesale and selling at retail. And they have to get the best prices. Otherwise, they're bidding against themselves, and they're not going to do that. Too much money involved. Okay, trend. So, the simplest way Jan talked about what he had to do in his calculation, and I go back far enough that I started before the computer was available to the masses, and the simplest and still the best definition of trend is bottom above a bottom, a top above a top, a bottom above a bottom, a top above a top. It's like a staircase. And if a bottom was put in here, then we have opportunity out over here to look for a place to buy. And this happens to be a 5-minute oil chart. And every penny's worth $10 in oil. This is serious money. Very serious money. And this would be in a buy under 51.40, and we know that we were above 52.07, and we're actually the high at the time was 18. So that's a good $700, $800 move in oil. And here's your pivots: bottom, top, bottom, top, bottom, top. So first you determine the trend, you're in an uptrend, then you're looking for down bars, these red bars to buy off of. And you want them to be bars of strength at logical support areas. Here's price and volume in action. Here is the distribution we were talking about. Here is weakness here, and these dots are saying there is no demand. There's no demand by professionals at this price level. They're distributing inventory. This bar closed well off of its high. That's weak. This closed well off its high and on declining volume. So as we're going up, volume is declining. This price is coming down. Volume is increasing. Sure sign of weakness. We come out over here. Bar comes up, finds natural resistance at these highs, closes at the middle of the bar on increasing volume, meaning pros had to be selling. Sold right here. Price fell. Just like that. This happened to be a Forex chart. And this happens to be volume in Forex. Anybody tell you can't get volume? Again, they don't know what you're talking about. You can do it with trade volume as opposed to the other. At least in TradeStation, that's what you call it. The other systems, I don't know. Okay, so back to pattern recognition. This is a E-mini S&P 3-minute chart. And look what we have here. We have that price coming down. And we see strength at this, what's known as a trender. And this is an order flow line where pros and amateurs have exchanged money. And here is a down bar of strength. Look, increasing volume. Pros must have been buying at 739. buying off of this level of support. Down bar closed at or lower than the previous bar. Blue bars are up bars, meaning it closed above the close of the previous bar or at the previous bar. Here we have divergence, meaning momentum is going up while price went down. There's a beautiful buy here in the S&P at the 2045 level. For those of you who don't know, this is $50 per point. So you're looking here at a $450 winner, 9 points in the S&P. And we suggest you trade it with $4,000 margin, which if you take out the $50 for slippage and commission, you now just made $400 on $4,000, or $25,000 on $100,000. Serious money. So here's some basics about price and volume. This being a buyer of strength, like I showed you the Sophia closing here. And this is stopping volume. Contrary to popular misconception, high volume tends to be a reversal signal. It's not a continuation signal. And some of you are asking, what are these orange and green bars? And they happen to be a test of price. You have two tests in price and volume. Shouldn't come as a shock. A test of price or a test of volume. So over here we see its bottom being put in. And again, look at the divergence here in momentum. It's telling you that a bottom is here. We come up here. Here is that. Now if we determine that the market is going to be in an uptrend, we're looking for a down bar of strength. This is strong. Closed well off the low, above the middle of the bar. On increasing volume, so pros had to be buying. Found support at this order flow, where amateurs and professionals are exchanging money. We talk about the tightest stops in all of trading. The best reward risk ratio, and you can see here this bar opened on the low of the bar and just went straight up, never went against you, and here we are oversold. So here are all the principles in play. You have a bottom having been put in here. We're looking for a market to go up. We're looking for a place to buy. We found logical support. We found a bar of strength, and we found a market that was oversold. Winner. I mentioned to you about the accumulation phase. Here it is on a 3-minute S&P chart. And all of this here, accumulation or bars of strength. Right here underneath the trender, which is a logical place. Again, you want prices being down. You don't want to be buying up here. You want to be buying down here. Here is that beautiful Sophia bars of strength. We come up. That same pattern we just showed you, we came down, we found a place to buy, and we're down here under 2080, and we're up here at 96. It's looks like we were about 76, and that's about $1,000 move from down in here to there. That's 25% on your money. So leading indicators, here's the same, these bars of strength, same pattern, coming out, coming down, buying down here, and again, running up. It's pattern recognition, same thing, time and time again, any market, any time frame. You're told to be afraid of volatility. News is one of your new best friends. Divergence is another one. And this is news, the FOMC came out here. Look how it riled the markets up. The markets came down, and here a bottom's being put in. We came up, and once again looking for buyers over here at which to buy the market. Off of the news, one more news. This is the Open Market Committee to Congress. $25 stop held. We suggest a $75 stop. Here was your buy. Almost 8 points, almost $400 from entry. $400 on 4,000. It's another 10% cash on cash trade. I mentioned that we give you a formula to make 50% a month when we showed you the compound interest. Alright, so you can apply this to any market. I'm just going to apply it to the S&P, but you can do it to gold, you can do it to oil, you can do it to anything. Once you determine what your margin is appropriately, and have at it. This is $50 a point, as we mentioned, and we're talking about risking $80. That's a $5 commission and $75 in price. That's 2% of 4,000, and therefore your margin is 4,000. So that's how you determine the margin. Whatever your risk is, it's 2% of what? We talked about these trading stops being the tightest, asymmetrical risk reward. For those of you that like the fancy words, that means a lot of reward and a very little risk. Okay, there's 20 average trading days a month, so if you're making 2 points a day, it's $2,000, and if you're using 4,000 margin, that's 50%. So gold is no different. Oil's no different. Oil is $10 per penny move. So if you can make $100 a day in oil at $4,000 margin, you make that 50% cash on cash, and you can start compounding like the slide we showed. Here is this in action. Here is the bar of strength, supporting the moving average and the trender. Here's a market that is oversold in an uptrend. And here, this was done in March. And here we bought at market, no limited order. We're not trying to get funny. We believe in what we're doing, so we're not trying to save one tick to miss out on the trade. So we bought at 2100 and sold at 2102. And that's the name of the game. Do this every day, 20 days a month. You make 50% on $1, and that's using appropriate margin. We'll get into that as far as leverage is concerned momentarily. All right, so here's some serious money. This happens to be the NASDAQ, and here's one of those bars of strength, and a bottom being put in, divergence happening here, and in 4 days, the big NASDAQ's $100 a point, and it's 170 points, $17,000 a contract. Well, if you traded that with $10,000 margin, your $10,000 just became $27,000 in 4 days. Here's a 20% cash on cash. Back to risking 82%. Here, S&P went 17 points of 50. We'll take this 50, and take off the 50, $800 on 4,000. It's 20% cash on cash. Here's that strong bar. Down here, that Sophia bar we talked about, is a pattern. Keeps happening. Showed us a bottom was put in here. You can see the divergence. Off we went to the races. This one trade, 20% cash in cash. You trade with $100,000. This one trade put $20,000 in your pocket. 1 day, one trade, and my time Pacific, you're done 9:45 in the morning. Here is $700 on the 4,000 margin, and this happens to be Forex. Look at that bar, same kind of bar. And every red bar with a dot underneath here, if you bought, was a winner. So increasing your net worth, we were talking about tax efficiency. It's not only about what you make, but what you keep. And wealth creators treat trading as a business. Financial independence and security demands it. That's what I was getting at when we started out earlier. So the largest expense a trader has is taxes. Every dollar paid in taxes is one less dollar to put to work for you. As a reasonable, prudent business person, you have an obligation to do everything possible to keep as much of your money in your hands. So let me make the argument here for trading futures. They generally receive better tax treatment, 60-40. Equities have a longer holding time. So here's somebody that 1 week in Intel makes 10 grand and another guy makes 9,800 trading the minis, and they're going to assume this tax bracket. So what happens? The stock guy pays $39.60 in taxes. The futures guy pays $27.18. Difference of $1,232. Recall we discussed about being a corporation, making money tax efficient, save $10,000. But here's 12%, 12.32% to be exact, difference in what you keep. And now take that and multiply it trade after trade after trade, compounding exponentially into the future for 10 or 20 years. This $1,200 on this one trade alone could be worth hundreds of thousands of dollars. Back to leverage. Yeah, a lot of people want you to over leverage. You don't need to. You can see how much money is available here. Being a reasonable, prudent business person and using the right amount of leverage, the right amount of margin. If you're over leveraging, you're back to self-sabotage. You're back to having to worry about your losses. You can't sustain a lot of losses if you're over margined. So the stock market is expected to collapse when corporate insiders are dumping stocks at a record pace, which they are. Stock advisors' bullishness has hit a multi-month high. It has. The VIX stock is reminiscent of October 2007. Companies are propping up earnings with records. Investor sentiment is high. Margin debt surpasses the pre-financial crisis record. Well, none of that matters. The bottom line is, every 7 years history has told us you can expect the markets to crash. The markets crash. That's the bottom line. And you need to avoid them, as you're going to see. So whether this happens now 1, 2, 3, 4, 5 times, we'll find out. We still got time. And yes, these things are part of what's going on when markets change direction. But the bottom line is markets crash, and you got to be prepared for them, because this really hurts. Why you want to avoid every future crash? Let's assume you're me. I was born in 1950. I'm 65 years old, and I followed the buy and hold experts and gave my money to the mutual fund industry. There's 2 mistakes right there: buying and holding experts and mutual fund industry. So let's assume when I was 50 years old, after 24 years in business, I had $1 million pension and contributions and growth. So the value after the dot-com bubble burst, those that bought and held, so in worst case scenario, lost 80% of their money. Conversely, between 2003 and 2008, the Dow and the S&P roughly doubled. So that $400,000 now, because $200,000 doubled. But we crashed again in 2008, and those people in worst case lost 50%. They're back to $200,000. So remember, this person had $1 million before the bubble burst in the dot-com. Look what happens if you avoid the crash, and you get out with about 95% of your account. Well, if you only lost $50,000, you got $950,000, and in that uptrend, that became $1.9 million. Where you gave up $95,000, so you had $1,805,000, and here between 331.09 and 423.15, 3.8 times. So just riding the index, no contributions, no exceptional gains that we're talking about here. Just riding, buying the S&P and riding it. 1.805 million has become 6.859 million versus the person that didn't avoid the crash at 200,000. Their 3.8 times is $760,000. That ought to be painful. Now, you don't want to make these mistakes. You want to learn how to do these things and take control of your financial future. So, Here's how to exit, plus or minus at that 2% from the top. But you can avoid them with a simple tool called the Avoid Every Future Market Crash Indicator, and it takes about 5 seconds a day. So earlier I said that anyone that takes Jan and I up on our no-cost offer that we're about to make, we're making this available to them, as well as the Asset Protection Guide. So when you know how to read a chart, you'll trade like a Wall Street professional, and you'll create the wealth and lifestyle you deserve. You'll consistently take money out of the market. You'll dramatically improve your trading results. You'll achieve your income and retirement goals before you ever thought possible. As well as you'll make sound professional trading decisions. You'll benefit when the market goes up and when it goes down. And if you don't know it, markets go down faster than they go up, about 3 times faster. So when you short sell, you can make money a lot quicker. And you'll be able to take control of your financial future, and you'll stop being a victim of what you don't know. Money ignorance costs people a lot of money. So what you've been shown today is a simple, proven method to make trading profitable and low risk. It's practical, it's easy to understand, with, as you saw, amazing wealth building opportunities. You're seeing how you can spot the insider's actions and duplicate them. You know exactly how the market works and why it was set up that way, and how to take control of your financial future with those 4 steps, which starts by finding a vehicle to create money. As I said, whether you create money in the markets or you start a business that caters to flowers, or a business that caters to taking care of swimming pools, doesn't matter. You need to find a vehicle to create the money to do the things Tony's talking about. This happens to be a way to create that money and create it a lot faster than any other way I know of, other than inheritance or the lottery. So, do you want to retire on time and on budget? Procrastination can be, it is expensive. When you're creating wealth for retirement, you want time on your side. The sooner you begin investing, the greater wealth you will accumulate. So take advantage of the benefit of compounding money. And here it just shows you on the left, with 2 years postponing, and starting with a $10,000 contribution, and doing it over 25 years and getting a 10% rate of return and putting in $500 a month into your pension plan. $118,000 is what it'll cost you. And if you wait 5 years and you're talking $50,000 contribution, $2,000 a month at 10%, and it's a little over $1 million. So money really grows, and it really grows fast. Astonishingly fast when you know how to use it. You know, those that know how to use it make this kind of money. Those that don't know how to use it pay it. Little offshoot of what I mentioned about compound interest. So the time is now. It worked 150 years ago, and it'll work 150 years from now. Only you can take control of your life and create the wealth you deserve. No one cares about or will take care of your money better than you. So if not now, when? Back to the Holy Grail, things that people are told but nobody's told where it is. Well, you've been told where the Holy Grail is, and they tell you follow the money, but they don't show you how. Price of volume is the ultimate follow the money. And if you do, you make money, and then you're joyful. And I happen to be a beach person, so my idea for retirement is to be at the beach, put in here whatever it is that makes you happy. So we want you to retire on time and on budget. So you've seen the 4 steps of financial freedom. You've talked about tax efficiency, either tax sheltered or less in taxes. Compounding money, the exponential of growth, Einstein talked about as a miracle. Your success is wanting what the market wants, which you have nothing to do. It frees you up. It's a very liberating thought. We talked about professionals leaving their footprints on price and volume chart, spinning pattern recognition. We've talked about money management, your best risk-reward ratio in trading. We've shown you a formula how to extract 15% per month in the market of your choice, that being a futures market. And we gave you the rules of engagement, buying down bars in uptrends and selling up bars in downtrends. So here's the benefits of working together. Once you understand how professionals manipulate prices, you can recognize their patterns, duplicate their actions, and achieve the same extraordinary results. And it doesn't matter whether you're totally new to trading or if you've been trading for years. The course will help you quickly develop your trading skills. In that sound, simple, proven method that's worked for over 150 years ago, that makes profitable trading and low risk, and you can quickly grasp because it's simple and straightforward. The truth always is. You not only gain the know-how, but also the confidence to trade like a professional, as well as handle money and grow money, protect money. And the principles can be used in any market: stocks, commodities, futures, ETFs, options, currencies, and in any time frame. It's practical, it's hands-on training that you can apply immediately. There's things that you learn tonight that you can apply immediately to your financial situation, in particular in the markets. And make sure that you find a way to be making enough money to incorporate. So the only way price and volume can fail is if you fail to use it. Once you understand how professionals manipulate the prices, you'll be able to recognize their patterns, duplicate their actions, and achieve extraordinary results. The principles, again, can be used in any market in any time frame. So the promise is, if you take the time to use price and volume as instructed, your life will change dramatically. The only way price and volume fails is if you fail to apply it. So it can be done. You can do this. You can take control of your financial future. You can change your relationship with money. You can create the wealth and freedom and lifestyle that you deserve. And Jan and I can help you if you let us. And earlier I showed you Mark. This is another trader. His name was Shamit, and he annotated this. And here is in the Forex market, 30 pips of profit, so there was $300. Here's 20 pips of profit, that's $500. And here he shorted this and was not available. He shorted this and made 30 pips, and therefore $800 in one contract trading the Forex. What I was thinking here was the next trade here. He had a short, but he missed the trade. That's what I was thinking about here. So here, this news created the volatility. There was a big rate cut. And up here, 20 pips. Here, another 20 pips. There's $400 right there. So, you got to wait for the right opportunity. Your professionals buy at wholesale where demand exists and sell at retail where supply exists. So you buy when professionals buy, you sell when professionals sell, you do what the public won't do, you stay disciplined, and you be patient. And there's common myths about trading. It takes years to learn to trade like a pro. Doesn't, if you're instructed properly. You don't have to have an MBA or college education. Markets don't care about your pedigree, don't care about your parents, don't care about your education. So you don't need to follow companies that you trade. It's all in the price and volume chart. Don't have to listen to the news, just know when it's coming out. Trends are not hard to determine. It's not an exclusive club for pros and rich people. It doesn't take a lot of money to get started, but like any business, it takes money to get started. And you don't have to sit in front of your computer all day either. So, how it works. This is the offer. This is the only thing we have for you tonight, Jan and I. Here is the offer. No cost, no obligation to you. Strategic financial consultation. In the chat box, you will see a link. And you go on that link here and you schedule an hour time, and we will call you at the scheduled time. We want to know who you are. We want to give you a chance to evaluate us. We don't work with just everybody. We need to have assurance that we're working with someone that is going to be successful. Someone that takes initiative, that takes direction. Someone that doesn't make excuses, that is not a whiner. If we find out, after you tell us what works for you, what's not working for you, what you're trying to accomplish, if we decide it's a fit, then we will work together. We might find out that it's not a fit. And if it's not a fit and we know someplace that you're better suited, it's our pleasure and our joy to be of service to have let you know that we're not right for you, but this, based upon what you've explained to us, is right for you. So, if you go to the link in the chat box, or it's right here, you can write it down, www.meetme.so/Joel, or here I said, or click on the red button to schedule a no-cost financial strategy consultation call with me. I look forward to getting to know you and to be of service to you, if at all possible. We wish you the best in your trading. Thank you for being here. Have a good rest of the day.